Hi traders, welcome to this video. Today I want to show you how I enter a stock. I personally use only two types of orders. I enter a stock with a market order, or I enter a stock with a stop order. I personally don't use limit orders because I don't fight for pennies. It's not important for me if I enter a stock, say 5 cents higher or even 10 cents higher. For me it's important if I want to get into a stock, so if I want to build a position, I want to buy at the right time, and I also want to buy immediately if the price goes into my direction. I prepared two examples. The first one is here DXCM, and I want to switch into the annotation software so that I can explain you a little bit how I would enter DXCM. You can see that DXCM shows a very nice pattern here, in that case cup and handle pattern. And you can see also that DXCM provides a clear breakout level. So you can see that the price now tested multiple times this level, and my expectation is if the price went above this level, a new trend will be started, and the demand for the stock will also increase, and a new trend will be started here. So when I want to enter the stock now, I place a stop order because I only want to buy the stock if the price moves above this breakout level. In that case, I will place a first stop order just a few cents above this breakout level, and as soon as the price triggers my stop order, the stop order will be converted into a market order, and I will buy a position directly. I personally don't buy a full position at once, and that has a reason. A lot of stocks which break out, so-called breakout trades, failed. And that's absolutely normal, and that's expected. I'm sure you know that the price moves a few cents above this level and then started to fall back into the range and start a correction or go sideways. And a protection for me is that I use multiple orders to get into this trade. So that means if I buy, for example, a 10% position, so 10% of my total trading capital, I mostly use two orders. So one order just a few cents above this breakout level, and the second one around 1% above the previous order. So that means if now the price only triggers the first order and then moves below the breakout level again, I only have a very small position. And in that case, I'm risking only very few money. And this is also a part of my risk management strategy. When I now buy a higher position, so around 20% or even 25%, I use three orders. So I would place another one just 1% higher. And in that case, if all the orders are triggered, my full position is established. If the price would move again below the breakout level, in that case only two orders were triggered and my risk is much smaller. I know from my experience and also from my trading history that almost every stock which really moves into my direction will trigger the three orders within 1 or 2 days. So that means if I have a very strong stock, it will move directly into the direction I expected, and in that case I established a full position in a very short time. So, but I always look at the risk point, or I try to focus on the risk and try to have the smallest risk possible. A second type of trades or a second type how I enter a trade is by market order. And I would also switch into the annotation software here. A few days ago, I bought into this stock, Tandem Diabetes, and you can see here a very similar pattern. So that's a cup and handle, or if you want that, it could also be like a volatility contraction pattern. And I was a little bit late with this stock, so it broke out, and it broke out very quick, so that I didn't place a stop order. I entered directly at market. So I bought a position around this 95 mark, and I bought it directly at market. I use this tactic only if the price is less than 5% above the breakout level. And in that case, I also do not buy the position at once. I buy a half position or a third position, depends on the position side, with a market order, and then I immediately place a stop order above the current high. So that means I placed another order 1% above the high at the time. So if at that time the high was around 96, I place an order at 96 and a few cents. And this is the same tactic. So if now the price would reverse very quickly and the price will drop to the breakout level again or below the breakout level, in that case I only have the half position, and in that case I only have the half risk. And you can see that also this tactic with market orders and stop orders combined is also focused on risk. Do not be afraid to use multiple orders for an entry. We are living in a time where trading fees are so cheap, especially if you trade US stocks. And for me, it's not a problem to buy and sell around a stock and around a trading position at multiple times. So the fees are so cheap, and you should use the advantage of enter a stock in multiple steps. Another thing I want to show you is I'm using also the 1 hour chart if I enter a stock. The benefit of the 1 hour chart is that you can that you have more information. You can see here now that every day is represented by multiple bars and not only one bar, and it has some benefits. So the first one is you can see the chart pattern much more clearly, and you can see also the breakout level much more clearly, and you can see here now that it was tested 3 times here in the 1 hour chart. And another big benefit is that you can choose your stop loss level much easier, because you can see the uptrend here in the 1 hour chart, and sometimes you have the benefit to place a tighter stop loss when you fine-tune your entries in the 1 hour chart. So in this example, I would place my stop loss below the last low here in the 1 hour chart. And I'm also looking for volume. So if I want to enter the stock here on a breakout, so that means above this level here, I also look, do I see some larger volume in the first hours, in the first trading sessions? And this gives me some confidence to buy into the stock and to place a stop order into the direction of the trade. So I hope you get some insights how I enter a stock, or how I trade into a stock. I think the biggest benefit for me is really to spread my position into multiple orders and do not buy a full position at once. In history, or in hindsight, it reduced my average risk a lot. So because this is one of the best secrets to avoid the impact of failed breakouts, especially if you are in a market or which do not favor breakouts and you are placing multiple bets. It helps you a lot to reduce the risk and to reduce the impact of failed breakouts. So think about the strategy, and yeah, I hope you get some helpful information here. If you want to follow me, you can do that on Twitter and of course here on the YouTube platform. And I also recommend to subscribe to my free newsletter. I send it out every Sunday with some trading tips and also some stocks from my personal watch list.